Just when you thought the crypto landscape couldn't get any wilder, President Donald Trump has thrown the ultimate curveball. In a move that's left both Wall Street and Main Street reeling, Trump has shifted from being one of Bitcoin's most vocal critics to its most prominent champion. For years, this was a man who dismissed digital assets as based on thin air, claiming they were nothing more than a threat to the supremacy of the US dollar. Yet, with the stroke of a pen and a few choice words, he's now calling Bitcoin amazing and great for the country. Make no mistake, this isn't just a change in rhetoric. It's a seismic shift in US policy, and it's sending shockwaves through the entire crypto ecosystem. Trump's about-face on crypto isn't just symbolic. This is the first time in American history that a sitting president has not only endorsed Bitcoin, but also taken proactive steps to educate the public and integrate digital assets into national strategy. In January 2025, the administration unveiled Executive Order 14178, strengthening American leadership in digital financial technology. This order didn't just revoke years of restrictive policies. It established a federal task force and demanded a comprehensive regulatory framework for digital assets within 180 days. The message is clear. The U.S. doesn't want to play catch-up anymore. It wants to be the global leader in digital finance. This complete U-turn has set off a frenzy in the markets. Bitcoin, which once seemed destined to remain an outsider asset, is now at the center of American financial policy. The result? The price has blasted past $100,000, shattering previous all-time highs. It's not just the retail crowd piling in. Long-term holders, often called whales, are stacking over 800,000 BTC each month. That's a tidal wave of conviction, and it's fueling speculation that we're just at the start of a historic bull run. But what's driving this newfound political embrace? For Trump, crypto isn't just a technological curiosity, it's a political scorecard. Just as he once touted the surging stock market as proof of his economic prowess, he now points to the booming Bitcoin price as a sign of strong leadership and American innovation. This isn't just about policy, it's about optics, perception, and legacy. Of course, the world is watching. As the US government amasses a strategic Bitcoin reserve, now holding an estimated 200,000 BTC, the implications are staggering. America has become the largest known sovereign holder of Bitcoin. The administration isn't stopping with Bitcoin either. A U.S. digital asset stockpile is being assembled, with a growing portfolio of top cryptocurrencies. And in a move that has stunned the real estate and lending markets, the Federal Housing Finance Agency instructed Fannie Mae and Freddie Mac to factor crypto holdings into mortgage risk assessments. For the first time, your Bitcoin and Ethereum stack might help you qualify for a home loan. Yet for all the bullish headlines and new policy directions, the crypto market is still grappling with deep, persistent legal uncertainty. Nowhere is this more evident than in the ongoing battle between Ripple Labs and the Securities and Exchange Commission. In June 2025, Judge Annalisa Torres issued a stinging rebuke to both Ripple and the SEC, who had jointly requested to dismiss the multi-year lawsuit and reduce Ripple's penalty by 60%. The judge's response was blunt. Show me exceptional circumstances. The message is unmistakable. No backroom deals, no shortcuts, and no settlements that sidestep the law. This legal limbo serves as a stark reminder that, despite growing political support, the crypto industry is still walking a regulatory tightrope. The SEC's posture remains aggressive, and many tokens, especially those issued in ICOs or under murky compliance, still face existential risks. Ripple's decision to withdraw its cross-appeal signals an attempt to bring closure, but it also highlights just how complex and unresolved the question of what constitutes a security in the digital age truly is. While Bitcoin enjoys newfound political favor, the rest of the crypto market remains in a holding pattern, waiting for the regulatory fog to lift. Yet, behind the scenes, the pieces are moving. The Genius Act and the Clarity Bill, two landmark legislative proposals, are working their way through the U.S. Senate. If they pass, stablecoins could finally receive legal recognition, opening the floodgates for billions of dollars to pour into decentralized finance, or DeFi. Wall Street is watching every development, waiting for the green light. Major institutions have been quietly preparing, building on-chain infrastructure and partnering with top DeFi protocols. They know that once the regulatory landscape is clarified, the race will be on. Stablecoins, digital dollars that move at the speed of light, will instantly turbocharge lending, borrowing, and yield strategies. Liquidity will surge, and DeFi could finally achieve the scale and legitimacy it's always promised. But it's not just about stablecoins and Bitcoin. The next wave of crypto innovation is already taking shape, and it's powered by artificial intelligence, next-generation altcoins, and on-chain growth metrics that are setting new records. Projects like Chain GPT are leading the charge, locking in over $8 million in staking as they blend AI and blockchain into powerful new services. AI tokens and blue-chip DeFi coins aren't just riding the hype. They're showing real, measurable gains in user activity, protocol revenue, and institutional adoption. From decentralized exchanges to automated portfolio managers, the infrastructure is evolving at breakneck speed. Institutional players are taking notice, positioning themselves for the next breakout. They're not just speculating. They're investing in the future of finance, betting that the next unicorns will be born on-chain. Yet, with all this momentum, there's a sobering reality. The crypto market is more volatile, more unpredictable, and more politically charged than ever before. Trump's bold endorsement has undoubtedly lit a fire under the markets, but it also raises the stakes. As the government accumulates reserves and Wall Street circles the waters, the risk of sudden policy shifts or regulatory crackdowns remains ever present. For every bullish headline, there's a lurking shadow. The SEC is still in play, and legal battles like Ripple's prove that regulatory uncertainty is far from over. The courts are demanding clarity, and until Congress delivers comprehensive legislation, the industry will remain on edge. So, what does all this mean for the average crypto holder? The opportunities have never been greater, but neither have the risks. On one hand, political support and regulatory progress could unleash a new era of mainstream adoption and institutional investment. On the other, unresolved legal challenges and policy reversals could trigger sudden drops, frozen accounts, or worse. If you've been in crypto for any length of time, you know that volatility is part of the game. But in 2025, the stakes have never been higher. With the federal government piling into Bitcoin, the world's biggest financial institutions ready to move, and new laws on the horizon, the next chapter could be written in the blink of an eye. For the true believers, the builders, the holders, the risk-takers, this is a moment of both vindication and caution. The bull run might just be getting started, but the path ahead is anything but straight. Political winds can change, regulations can tighten, and courtrooms can upend even the most carefully laid plans. So, buckle up. The 2025 bull run could be the most explosive and unpredictable in crypto history. The money is coming, but so is the risk. Stay sharp, stay informed, and remember, in the world of crypto, fortune favors the bold, but only the prepared survive.